Over the last decade, Jeff DeGraaf has been one of Wall Street's most influential macro-based analysts. He recently left ISI Group. He's going to start publishing research under a newly created entity, Renaissance Macro Research.
Jeff has been the #1 ranked technical analyst over the last 6 years. He joins us this morning to talk about market trends. And Jeff, I want to start really simple, if you don't mind. You look at the charts. That's what you do for a living. What do they tell you? Buy or sell right now?
Well, if you're a trend follower as we are, they say buy. We had an oversold condition last week. All the trends as we go through and look, or I should say the majority of trends in the S&P are positive, and with that backdrop, it says the path of least resistance is higher.
On what basis did you find the market oversold?
Well, there's a few things we look at. First is 20-day lows. When the number of names in the S&P 500 that hit 20-day lows exceed 50%, that's usually a level that shows some type of anxiety. And that was probably the biggest one in the last week or so that we saw that flagged for us.
So, Jeff, we have some charts here. This is the 20-day low. But I know just even more simply, going back to last week, this close at 1256, why is this level of support significant to you? Why, as you just told Erik, does it mean the market's going higher, and by how much?
Well, the 1256 level is roughly the 100-day moving average, and that served as a pretty good proxy for support. That combined with that spike in 20-day lows said, okay, oversold at an area where the market usually finds some support, we're probably going higher. The question,
so how much higher,
right? So this is a market, not to get too complicated, this is a market that's driven by trend, not momentum. And that usually means that you'll grind higher, you won't really thrust higher. And so I do think that we'll take out those hold highs, but I'm in that 1350, 1375 area in terms of the S&P between now and say the beginning of the second half.
When you say, Jeff, trend, not momentum, grind higher, right. Why? Because we just don't have enough volume?
Well, it's not so much volume, it's the number of names really surging higher. A lot of them are limping higher, but they're not really surging higher. In good markets that are really just, you have to buy the market, are markets that are defined by momentum, and that's just not happening here. So the path of least resistance is higher for most names. It's just not thrusting higher.
But just to put it in sort of layman's terms, again, it's a question of breadth, it seems like.
That's exactly right. So the number of names that are showing you that significant surge is low. It's really concentrated in energy at this point.
So you'll be paid off then for being a sector picker or a stock picker, a single stock picker?
Without question. Correlations are at roughly a 4-year low, which means that you're finally able to add some value by, buying Apple and not buying Exxon. And that's the first time in 4 years we've seen that.
Let's take a look at an energy chart, because I know we prepared one, and this is energy relative to the S&P 500?
Yes, exactly.
So what does this show? I mean, let's just say I'm not a shareholder in Exxon or BP, so is now the time to buy?
Yeah, if you want to be outperforming the market, we believe that relative strength persists, and this is absolutely the point where you need to own energy in a concentrated way vis-a-vis the S&P 500.
But Jeff, what about a lot of people that say oil's already up to $100 a barrel? It's too late. I missed it.
Yeah.
Any of these plays are already past.
Well, historically, that doesn't tend to play itself out. You want to stay with the trends as long as they're in place. As they start to fade, you want to back off them, and we're just not seeing it fade at this point.
Now, what would you look at beyond energy? Where are there other sectors that are sending buy signals, shall we say?
Industrials are still very bullish, which is good news. The one that's started to flag here in the last month has been discretionary. And discretionary and industrials are an important component to an overall bullish market call. So we're going to watch discretionary very carefully. But energy, industrial, still positive. Watch discretionary, because if they start to flag, we may have an earlier problem on our hands than what we foresee right now.
Jeff, thanks so much for being here on the Inside Track. We'd love to have you back. Jeff DeGraaf, one of the world's top-ranked, in fact, the top-ranked technical analyst, here to talk about market trends. He says it's a buy, but be prepared for the market to grind higher.